All right, it's that time again, Fintech earnings season. And while some companies are still feeling the hangover from 2021, a new class is starting to emerge. And man, they are bringing some serious honor roll energy. So today we're going to look at who's really growing up. I mean, this really gets to the heart of it, right? The whole industry is at this massive turning point. We're finally moving away from that old playbook, the growth at all costs mantra, and into a new era where solid fundamentals, profitability, and stability are the name of the game. So yeah, let's see who's actually making the grade. So on our honor roll today, we've got three really fascinating companies. And what's cool is they're each taking a totally different path to get there. We've got LendingClub, the one-time disruptor that's now acting like a grown-up bank. Then there's Nasdaq, the exchange giant that's quietly becoming a tech powerhouse. And finally, Live Oak, the small business lender that's become a quiet giant. First up, LendingClub. And wow, their story is just the perfect example of this transformation we're talking about. A real glow-up, right? From a scrappy startup to this established, regulated player. It's the classic hoodie to blazer story. And look, the numbers don't lie. They didn't just meet expectations, they absolutely crushed them. I mean, an earnings beat of 23%, a 32% jump in revenue from last year, that's huge. And of course, investors noticed. The stock shot up around 11%. This isn't just about one good quarter. No, this is validation, proof that their whole new strategy is working. So, what was the catalyst for all this? Well, it all goes back to this one game-changing move they made back in 2021. See, they bought a bank. And by doing that, they fundamentally changed their DNA. This was not just another acquisition, you guys. This was a total reinvention. And you gotta understand, this shift is profound. Okay, so the old LendingClub, they were basically a marketplace. They were totally dependent on pricey outside funding to make their loans and then sell them off. But the new LendingClub, it's a real bank. Now it uses all those stable, low-cost customer deposits to fund its own loans. And the best part? It can keep those loans on its own books and earn that steady, recurring interest income. It is just a way more stable and way more profitable business model. And this quote just captures the whole thing perfectly. They haven't lost that tech edge, That startup hustle is still there. They've just gone and paired it with the stability and trust that comes from being a real regulated bank. The whole shebang, complete with FDIC insurance to protect everyone's deposits. It's like, yeah, they've put on the blazer, but they're still wearing the cool sneakers underneath. All right, let's pivot to our next company, because Nasdaq is in the middle of its own kind of quiet identity revolution. I mean, we all think of it as a stock exchange, right? But it's quickly becoming something totally different. It's becoming a true fintech engine. Okay, so check this out. It might actually surprise you to learn that over a third of Nasdaq's entire revenue now comes from its financial tech division. This isn't some side hustle for them. This is a massive, growing part of their business that is literally redefining what Nasdaq is. And this right here is the absolute perfect metaphor for what they're doing. So instead of just hosting the big digital finance gold rush, Nasdaq is now selling the essential tools. The picks and shovels that every single company out there needs to dig for gold safely and effectively. So, what are we talking about here? What are these picks and shovels? We're talking about the really critical behind-the-scenes infrastructure, things like cloud compliance platforms, super sophisticated tools to fight money laundering, even tech that can keep an eye on the crypto markets. Look, it's the unglamorous stuff, I get it, but it is the absolutely vital plumbing that makes the entire financial system work. And the end result of all this? It's really powerful. You can almost think of them as becoming the AWS of market integrity. They're providing that foundational, cloud-based tech layer that makes sure the whole system actually works and has integrity. They're not just a player in the game anymore. They're becoming the utility that powers the game itself. Okay, finally, let's talk about our indie favorite, Live Oak Bank. If this company were a band, they'd be the one that somehow tops the charts without ever seeming like they're trying to be famous. They are, without a doubt, the quiet giant of fintech. And man, just look at their numbers. They really speak for themselves. We're talking solid net income, massive loan production, and huge growth in deposits. And not just this quarter, but quarter after quarter. In a year where, let's be honest, a lot of lenders are struggling, Live Oak just keeps its head down and quietly, consistently delivers. So what's their secret? What's driving all this success? It's one word: focus. They have this laser-sharp focus on a niche that most big banks just completely overlook: small, independent businesses. And this is my favorite part, because it really shows you the personality behind the numbers. They serve people like veterinarians, landscapers, get this, even beekeepers and local craft breweries. It's like they've combined the soul of an old-school community bank with the brain of a cutting-edge tech company. It's all about serving these really passionate entrepreneurs. And this quote just nails their whole ethos. See, for Live Oak, this whole banking in the cloud thing isn't some new pivot. They were pioneers. They built a cloud-first, tech-driven bank from day one, from the ground up, because they just knew it was the best way to serve their customers. They just made it look cool way before it was even a trend.
Okay, so let's zoom out. We've just looked at three very different companies: a transformed disruptor, an evolving giant, and a niche pioneer. So what's the big takeaway here? What's the common thread when you put them all together?
This table really lays it all out beautifully. You've got LendingClub taking that hoodie to blazer path, right? They embraced regulation to build a stable foundation. Then there's Nasdaq, becoming the picks and shovels provider, basically building the essential infrastructure for everyone else. And of course, Live Oak, our indie favorite, proving that when you pair a super specific niche with great tech, that's a powerful winning combo. But the real common thread, the big idea tying all this together, it's simple. Fintech is finally growing up. That whole era of just hype and burning through cash to chase growth at any cost, well, that's giving way to a new focus. It's about profitability, it's about stability, and it's about building real sustainable businesses that can actually last. And this leads to a really profound shift in how we should think about these companies. These guys, the ones we used to see as the Wild West outsiders trying to tear down the whole system, they're now becoming the system's new backbone, one compliance-approved API at a time. They're moving from the fringe right to the very center of the financial universe. Which, of course, leaves us with one last really fascinating question to chew on. If Fintech's original disruptors are now becoming the system's new foundation, well, what gets disrupted next? Who's coming for them?